Hello everyone, we will now conduct a financial chart analysis of Mstr and Bmnr. Before we begin, it is important to note that while all data in this analysis has undergone rigorous verification, due to a time lag in Bmnr's SEC financial reporting updates, some data may not be available at the same time frames as Mstr's. Therefore, there are differences in the timeframes of the data for the two companies. Please take this time factor into account when interpreting the data. Basic introduction of the company. Bmnr is an American company following GAAP, FASB, established US GAAP. Mstr is an American company following GAAP, FASB, established US GAAP.
Mstr's total liabilities doubled in less than a year, surging from $7.6 billion to $15.5 billion. This vertical growth, driven by long-term debt, indicates an aggressively leveraged expansion phase. Cash flow reveals a high-risk pattern. Operating cash flow is negative. The company relies entirely on $19.4 billion in external financing to fund equal outflow in investment. This is a classic borrow-to-buy strategy. In contrast, Bmnr's total liabilities grew moderately from $3.19 million to $5.38 million. This control rise supports business growth rather than financial engineering. This is the most critical chart. Bmnr's operating cash flow turned strongly positive to $1.36 million. The company is demonstrating self-sufficiency and entering a healthy economic expansion phase. Mstr's ROE and ROA show extreme volatility, while high leverage amplifies returns in good times. It causes several instability in earnings equity and past high risk. Although Bmnr's returns remain negative, they are rebounding from lows. Combined with positive cash flow, these signs are structural improvement in profitability. Finally, Bmnr's income statement trend. The curves from revenue, cost, and expenses are covering, showing effective cost control and a narrowing loss gap driven by operating efficiency.
Mstr financial analysis. Income statement analysis. Past 3 years. In 2022, cost of revenue was about $109.94 million, while operating expenses reached $1.775 million, including digital asset impairment and tax adjustment. For 2024, operating expenses are $2.316 million. For cost of revenue and other items are not yet fully reported. Observation: operating expenses fluctuate significantly due to digital asset impairment, while cost of revenue remains relatively stable. A line chart shows cost of revenue, operating expenses, and other income expenses across 2022 to 2024. Would you help visualize these trends? Revenue composition 2023. Total revenue in 2023 was approximately $496.26 million. Based on available data, estimated revenue broke down. Software and subscription approximately 70%. Other services approximately 30%. A pie chart can illustrate this revenue structure, highlighting the dominance of software and subscription income. Common size income statement 2023 expressed as a percentage of total revenue. Total revenue 100%. Cost of revenue 26.1%. Gross profit 67.3%. Operating expenses 123.2%. Observation: operating expenses exceed total revenue due to non-recurring charges, yet gross profit remains strong, reflecting the profitability of core software products. Conclusion: Mstr financial volatility in operating expenses, a stable core revenue based from software, and a high gross margin despite temporary Bmnr analysis for Mstr and Bmnr. Now I will present the Bmnr analysis for Mstr and Bmnr from 2021 to 2023, highlighting the limitation of this method for these companies. Introduction: Mstr relies heavily on Bitcoin holding. Bmnr is a crypto mining company with low revenue and persistent losses. Because of these non-traditional business models, traditional ROE metrics can be misleading. Bmnr formula: ROE can be broken down into three components. NPN equal net income divided by revenue. AT equal revenue divided by total assets. EN equality total assets divided by shareholder equity. ROE equal NPN multiplied by AT multiplied EN. Mstr observation 2021 to 2023. Net profit margin is highly volatile due to Bitcoin revolution. Asset turnover is very low, as Bitcoin does not generate traditional operating revenue. Equity multiplier cannot be reliably calculated due to missing equity data. ROE is largely driven by Bitcoin price changes, not operational efficiency. Bmnr observation 2021 to 2023. Net profit margin is extremely negative. Asset turnover is very low due to minimal revenue. ROE is unstable. Bmnr analysis provides limited insight. Conclusion: Bmnr analysis is useful for mature, stable companies, but less meaningful for Mstr and Bmnr. Analysis should focus on cash flow, operational efficiency, and industry-specific risk rather than ROE alone.
Let's see Bmnr's liquidity and asset composition. According to the data, we can observe three main patterns in their current assets over the past 3 years. First, Bmnr's cash increased significantly in 2024. This suggests improving liquidity and a stronger ability to meet short-term obligations. Second, accounts receivable remain high in 2023 and 2024. High receivables can indicate strong sales, but they may also reflect collection risks or delays. Third, inventory levels increase gradually but still represent a small portion of total assets. This shows that
Bmnr doesn't depend heavily on physical inventory. And then when we look at the ratios, each component divided by total current assets, we see three more key trends. Cash as a percentage of total asset increased steadily from around 44% to 57% and then to 84%. Accounts receivable as a percentage of total asset decreased from 43% down to 24%, and inventory stayed at a very small share. Overall, Bmnr's liquidity position appears to be improving. After comparing data, we summarize the strength and weakness of Mstr and MARA. So first, the strength of Mstr is relatively low leverage and long-term Bitcoin strategy. The company's long-term positioning with significant portion of Bitcoin relative to equity provides a larger capacity to absorb risk. Assuming the price of Bitcoin increases, its asset value will rise significantly and supporting its debt structure. And the weakness of Mstr is weak interest coverage and relatively low current ratio. Its operation or cash flow may be insufficient to easily cover interest expense. The short-term assets may not adequately cover short-term liabilities. And next part is MARA. The strength of MARA is relatively strong liquidity and dual potential from mining revenues plus Bitcoin reserves. On one hand, the company generates revenue through mining operations, and on the other, it has the potential for reserve asset appreciation from holding Bitcoin. And the weakness of MARA is reserve liquidity risks and poor interest coverage. Although holding Bitcoin is an advantage, the company may be forced to sell at unfavorable price point if it needs to liquidate reserves to repay debt. Additionally, the fluctuating book value of Bitcoin can significantly impact the balancing sheet. Okay, next part is time interest earned. Mstr's TIE has been less than 1.5 for the past 3 years, indicating high risk. MAR's TIE was less than 1.5 in 2022, also indicating high risk, but greater than 5 in the following 2 years, so indicating strong. Okay, next, let's look at Mstr's liquidity ratios and asset composition. The report includes cash equivalent, and accounts receivable for 2021 through 2023. From the data, cash increased from 38.1 million in 2021 to 46.8 million in 2023. Accounts receivable rose from 65 million to 72 million. Current assets grew faster, reaching nearly 268 million. Based on ratios, cash as a percentage of current assets fell from 21% to 17%, and accounts receivable as a percentage fell from 36% to 27%. This indicates Mstr's liquidity didn't improve at the same pace as asset growth.